Hello and welcome to Moneylife. This is Sucheta Dalal. This week we are going to talk about vanishing companies. Yes, they still exist nearly 25 to 30 years after the whole concept happened, when companies raised money from the public and then wanted to run away with it. So they didn't want to be listed anymore. Just recently, on 26th May, the Bombay Stock Exchange issued an advertisement in a business paper to delist 50 companies. The advertisement said that it had sent 2 letters to the last known address of these companies, and since there was no response and the companies had been suspended for over 6 months and had not been complying with listing agreement requirements, they were going to be delisted. Now, what happens to investors who have invested in these companies? This is something that should be of concern to all the retail investors who have invested in these stocks, and someone would have invested over there. But usually retail investors are the last to wake up, and when they do, it is usually too late. So retail investors will have these shares in their demat accounts, and when the shares are worthless, they are delisted, those shares will still be in the demat accounts and you will be paying an annual maintenance fee to keep them there. Because there's nothing else you can do with these shares. You take them away, you want to rematerialize them, the company is not even answering the exchange. So there's no question of converting them into paper. And you dump them, if at all the company wants to come back and gets relisted, you don't have a hope in hell because you've got rid of it. And this happens. Okay? It happened several years ago when DHL first went public, then got delisted, wanted to dump retail investors. Some of them hung on to their stock, a small number who refused to sell their shares when the company wanted to buy it back to go private. And a couple of years later, when the real estate market was booming and they could again raise money at a premium, they got relisted. It was an atrocious thing to do. Shareholders fought and they made huge amounts of money. So until a company has really shut down and got liquidated, you want to hang on to that paper because they call you a part owner. Let's look at what each of the players involved have to say about this. The Bombay Stock Exchange issued the advertisement, but there is nothing much it can do. Remember, 700 companies have been delisted, and the Bombay Stock Exchange correctly says that we have no powers other than delisting companies. Remember also that since the Bombay Stock Exchange is over 135 years old, it has this legacy of old, low capital stock which is listed on the exchange, which it can't get rid of. These stocks are badly manipulated very, very regularly. Many of them quote and trade well below 1 rupee, and they are used for a whole lot of things, including tax evasion and to lure retail investors, ramp up the price, dump it. So pump and dump operations happen with regularity. Moneylife has been writing this fairly regularly. So look at what I'm showing you. I'm going to show you the list of 50 companies. Keep it in mind for later. I'm talking about the fact that these stocks, even when they remain listed, the management isn't interested in complying with anything, and it's just a burden for the exchange. So when they are used for pump and dump operations or capital gains rackets, we blame the exchange, and they say, why are we with this legacy when the National Stock Exchange, also over 25 years old, but when it came, it cherry-picked the best stocks and doesn't have the burden of regulating these unknown companies coming out of nowhere. Now, price manipulation in low price stocks is so rampant that there are even screeners available. You just Google and you get lists, you have message boards which prop up these stocks, and you have screeners to say which ones you should look at. What is the conclusion? That the buck stops with the Securities and Exchange Board of India, whose job it is to be able to regulate these companies. SEBI is quite happy to go along, keep quiet, let the stocks get listed. Doesn't matter what happens to investors. There's only one person who's been fighting this, which is Midas Touch Investor Association, and Virendra Jain, who heads it. He has fought long battles on behalf of retail investors, and brilliantly, mutual funds in the 90s after the Harshit Mehta scam, people would have lost a lot of money on assured returns. It's he who went to court. Vanishing companies were also identified by his efforts in the 90s. So the term vanishing companies was something that he came up with. And this means companies which, when the going is good, there's a bull market, they raise money, and then They just want to stop complying, get delisted and get away with it. Now, Viren Jain correctly says that this won't do. If we are in part owners, let the company be liquidated, let the promoters pay a price. Businesses can do well, can collapse. So we are not talking about it. Equity is risk capital. It's quite possible that the business won't do well, in which case everybody should feel the pain. It can't be that the promoter raises money by listing and just quietly delists and continues to run his private company with no obligation to anyone. So Virendra Jain and Midas Touch Investor Association fought it out and got a wonderful judgment from the Allahabad High Court on 26 March 1999. This was writ petition number 659 of 98. The court laid down the terms of what, or definitions of what is vanishing companies and what action should be taken. It asked for task forces to be set up. In fact, it asked for a coordination and monitoring committee to be set up by the Ministry of Corporate Affairs and the Securities and Exchange Board of India. Now remember, this was 1999. Things have changed dramatically since then. Virendra Jain has sent a show cause notice to SEBI and the Ministry of Corporate Affairs, and he intends to file a contempt petition asking for compliance with the Allahabad High Court's directions, very correctly. But so many years later, it's my view that he should ask for some changes. One, is it an MCA problem? To my mind, yes and no, but not really, because we have SEBI as a regulator looking at listed entities, and this is about cheating people by listing. It's only by listing that people who don't know you give you money through a process. So the buck stops at SEBI's door. He has to look at moving it away from MCA, because to my mind the primary responsibility is that of SEBI. SEBI collects a lot of money as fines and penalties from people. It has to use this to trace who those companies and promoters are. It's not good enough to say the BSE sent 2 letters to the last known address. Remember, today technology has made such leaps that fintech companies which give loans of 500 rupees are able to track down the person, his family, his friends, his office, call up, abuse them, drive people to suicide. This can be done for 500 rupees of a loan. I don't see why SEBI, as big, powerful and empowered as it is, cannot use its resources, technology, forensics and audit to go after and find out where these promoters are. And it's not good enough to say that they will be barred from the market for a few years. That's not what investors want. We want that they either comply and start reporting, or they get liquidated, there's a police complaint filed against them, and whatever is recovered is shared equally with all shareholders, the proportion of their shareholding. Now remember, SEBI has a lot of powers. Today, SEBI is one of the most powerful regulators in the world. It has powers of search and seizure, arrest. It doesn't need to go to anybody. It doesn't need to file an FIR as required by the Allahabad High Court. It can do the entire investigation itself. It can find out the address. Coming to the address, Viren Jain himself has done a random check of 10 of these 50 companies, and he finds that right until 2016-17, they were filing annual reports. That means as a statutory auditor. Any of you who have anything to do with companies know that the Ministry of Corporate Affairs has such strict rules that you not only do KYC, a video KYC, but you have to stand in front of your office in order for them to know that the company exists and the directors are actually part of it with their office nameplate in the background. If this is being done, if there is an auditor registered with the Institute of Chartered Accountants, it is hard to believe that you will delist a company by sending 2 letters. And SEBI has to step in. So 22 years later, we have a judgment. We need a contempt petition filed that drastically revises the judgment, that makes only SEBI accountable, asks it to get data from the MCA, which has to be available, because there was so much of publicity and press releases about whether companies are dead or alive. So if these companies are dead, let's look at whether they were liquidated. If they are alive, let's track the promoters. It's an easy, simple job, can be done in few weeks by a well-funded and powerful regulator like the Securities and Exchange Board of India. Now, who's going to do it, and will SEBI do this? It will not unless retail investors open their mouth, make their voice heard, and put pressure on the regulator. This can happen individually. Most people bleat about not having the powers to do anything. Well, you can join Virendra Jain, join the petition, write to him, look at this list of 50 companies. You may not be able to see it, though I show you an image on this video blog. I would suggest go to www.moneylife.in, look at my hard copy article and look at the email ID of Mr. Virendra Jain, which is Midas Touch New Delhi, one word, @yahoo.com. If you own those shares, write to him. He's not even asking you for money. Participate in it. Wake up. Raise your voice, make the regulator accountable to you. The preamble of the SEBI Act says the first job of SEBI is to look at investor interest. But if you don't ask, and you don't ask your parliamentarians to ensure that SEBI does its job, nothing's going to happen. If you like what I say, spread the word and subscribe to this video blog so that you hear more of us. Thank you.